my positions here using a strategy simulator that I'm toying around with, which so far I have to say I do like quite a bit. But anyway, let's run through some of the parameters. This is the basic info in these yellow cells here in column C, cell 3, 4, cell C3. There's date, there's time. We're going to make this now. Underlying price of HIMS, which is the stock I'm referring to. We're going to put this 55, let's say 20 roughly. What do I have here? 55.20. Okay, we don't have to worry too much about the current interest rate. Let's continue. Going along from cell B8, we have the position that I have, which is, this is part of it, 50 shares of HIMS. The initial price was 52.24. There's the cash flow, price, current value, and so forth and so on. Let's jump over to the call that I sold. I sold a call, 61 strike, that expires on the 20th, which is roughly 10 days away. I sold it for $1.18, currently trading a little higher, $1.33-ish. Let's double check this, make sure it's correct. $1.33, perfect. And let's get back to my sheet here. And here's some information that I'm just going through, looking at the risk graph here, going over various ways to analyze the position. And what I do want to mention is that I didn't have to sell this call, but selling this call, and by the way, I did roll it down. I had it at 65, I believe. Let's see. So today I did roll it for 50-cent credit. Originally I sold this call for 265, and HIMS has gone lower since I sold this call. So I decided to roll it down from 65 to 61. I did that earlier today. Getting back to the sheet here. Note that when I do something like this, this is basically going from a long stock to a short volatility play. Because now, once I sell an option here, and I sold currently short the 61 call, this turns it into a volatility play, a short volatility play. And for this position to receive max value, it has to end up somewhere around here. And by here, I mean 60 at expiration. Now, if we jump ahead to expiration, note that it more prominently displays how being long this stock, 50 shares of this stock, HIMS, and and being short a call from 61, this is a structure, this particular structure is clearly short volatility. Now, another thing to keep in mind is that this call that I sold is the hedge value here is roughly 28. So rather than having sold this call, I could have just reduced the position that I had of 50 long 50 shares by 28, and that would have left me long 22. So that would have left me all of the upside uncapped, and rather than being long 50, I would have been long 22, which, let's do this. It's going to look something like, let me eliminate that. Okay, so it would look like this, which this structure is just simply long stock, and rather than long 50, I'd be long 22. But when I add in the call to this position of 50 shares of stock, now I decided that I'm going to be short vol, and that is an important distinction to make that I don't think a lot of people realize that they're doing when they're writing a covered call. If I would have had 100 shares of this rather than 50 at expiration, this is going to look very familiar. This is basically selling a put, but when you have stock, in this case 100 shares, you're long, and you sell a call. This is the equivalent of synthetically selling a put at 61. Let me get back to current position. So again, this is what it looks like, and at expiration, I would have capped my upside at the 61 strike, as opposed to if I had been straight up long, then we just have the long structure there. But let me get back to the original position here. So currently long 50 shares, short one, call at 61. Here's my expiration. Here's what the structure looks like at expiration, and this is what it looks like currently. Okay, I do like this. I don't have a macro option. I do not have any sort of affiliation with them. I stumbled upon this when I was doing a little research, and since I'm not going to since I'm not going to go out and acquire the components, parts of a Porsche, and then build it myself, because that's not the kind of thing I do, I can go out, buy it, and drive it, and handle a car with that stick shift manual transmission. And anyway, I could just go buy it and take it for a cool spin, rather than put it together myself, which is not what I'm good at or like doing. All right, hopefully that was helpful. I'll catch you guys next time.